Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is a daily analytical report. So let me show you what's going on the markets from the fundamental point of view and from the technical point of view. Obviously, first we will take a look on the calendar. We'll see what's going on, what are the main market movements, and after that we will move to the charts and we'll try to look for decent trading setups. First, as always, we start with the calendar because that's what you should do when you want to start trading every day. Even if you're a technical trader like myself, I trade mostly technically. I always check the calendar first because even the best technical setup can be destroyed by coming macro data, especially if the actual number is much different than the consensus was. Usually that causes a strong movement. For example, we had a nice movement on British pound today. Luckily for technical traders, it was a movement which was in line with the technical analysis. So here fundamentals came along with the technical analysis, but it's not always like that. It's not always that technical analysis comes with fundamentals. So you have to know at least when important data for your instrument is published, if it's published that day. Before we'll start with the calendar, let me talk a little bit about the market in overall. As you know, last two Mondays actually, we started with the news from North Korea about the first missile which flew over Japan. Then we had this situation with the nuclear test. So every Monday we started with a decline on stocks. We started with the increased appetite for safe haven assets, but this time nothing happened, and that was the reason why we had quite the opposite start of the new week. So safe haven loss, and there was increased appetite for stocks and, for example, other risky assets. That was the one thing. So no news from North Korea, no new nuclear tests, no new missiles launches. But the other thing was Hurricane Irma, which apparently did not strike the Florida with such force as previously predicted, as those models were predicting. So apparently it caused much less damage than anticipated, and that was also perceived as a positive news, and that also caused the risk on mode on the market. So we do have this combination of those two things. So nothing new from North Korea and less damage from the Hurricane Irma. In this environment, MSCI World Stocks Index hits new all-time highs. So that's the main outcome of this situation. And from the global perspective, that's actually it. We also do have this macro calendar, and as you can see, large pack of data from UK, and from the very beginning till the very end, that data was much better than expected. Every single one. PPI, CPI. Well, CPI was the most important here. Retail price index, everything was much better than expected, and that caused a massive upswing in the value of British pound across the market, and we will be able to see that once we will switch to the technical view. But as this is our first daily analytical report this week, and tomorrow, for example, we won't have a daily analytical report. We'll just have a webinar about MetaTrader 4. So let me show you the full calendar for this week. But obviously, let's filter only top data. So on Monday already had data, obviously. On Tuesday, CPI from UK. On Wednesday, PPI from United States. On Thursday, we will have also interest rate decision from UK. We'll have CPI from US, and on Friday, retail sales from US. So as you can see, every day we're gonna have something. So it's maybe not the busiest week, but we have some data to look at. So it won't be like that the calendar will be completely empty. And that being said, I think we can now move to the technical analysis. First we can start with euro dollar, because we can see a double top formation here. If you're wondering why we stopped here on this gray resistance, I think weekly chart will be suitable here, because these are lows from 2012. Right? These are lows from 2012. Let me measure this. I want to see. Okay, we didn't reach the correction equality pattern yet. I don't think we can do that in this environment, because I think that we just started a correction of the American dollar here, and actually we should aim the green line or even 38.2 Fibonacci level in this situation. So again, we bounced with a double top formation from those lows from 2012. We broke short, well, midterm actually, because it's from the middle of August, midterm uptrend line. First aim is here, 118.30 here. Second target, and maybe it will be the same if the price will fall like that, is the uptrend line, and then we have 38.2. So it's not clear if we're gonna go to 38.2. I think it's more or less clear that we'll get here, so that's a decent short trading opportunity. If you're a bear on euro dollar, you don't have an easy life for the last few weeks or months, even months. But if you're a bear, I think it's, if you really want to sell euro dollar, I think this is kind of a good occasion to do that. Because potentially what we are having here, what we are looking at, is 100 pips downswing. And I think it's gonna happen. I think we have high chances that it's gonna happen. So my base scenario for euro dollar is a drop in the midterm. Because in the long term we all know that the sentiment is positive. There's no other way around here. All the signs shows us possible continuation of a bullish movement. But in the short term, we do have a decent trading occasion here. British pound to American dollar. Still, I want to show you this correction quality pattern. That was beautiful. We traded that, but as you can see, we closed that here. If we would kept that position, we would earn much more. But don't be greedy. Being greedy is a huge problem. With this upswing today, we beat those highs from the beginning of August, and we are on the highest levels obviously this year, but we are also on the highest levels since September 2018. 2016, and everything is ready for the price to test highs from September, from July, and those levels, that resistance from June 2016. And to that level, which is around 134.4, we still do have 150 pips. But in general, there are high chances that we will get there. That's what the price is trying to tell me. And I strongly believe in that we should get there. S&P 500 made all-time highs. That's what we were expecting when the price was here, and we are talking about that for the last few days. So we are not surprised with this movement. The party goes on in United States. Traders do not think that stocks are overvalued. We have a channel up formation. It's in an uptrend, you shouldn't be using the upper line of the channel up formation as a resistance, but let's say that this is the next target here, so 2,520 points. Everything looks good, everything looks great. We are very close to the psychological barrier of 2,500 points. That also can spark start a bearish correction, but just hypothetically, because we never been there on those levels. New Zealand dollar to American dollar, not a particularly interesting situation here. We still, let's say, we defended this inverse head and shoulder formation, and it looks alright. We are above that green support. As long as we are above green horizontal support, the sentiment is okay. The next instrument is dollar index. Here you can see this recovery of the American dollar, which is trying to build a double bottom formation, but again, as long as we are below the downtrend line, the sentiment is negative. Breakout of the blue line itself won't trigger the buy signal. I think that the buy signal will be triggered once the price will break this line, this orange line. So for that we still have some time. It probably won't happen this week, maybe the next one, but as long as we stay below orange area, the sentiment is still negative. Gold, this is this bearish gap after the weekend, so precious metals are losing, but still are on high levels, right? We are in an uptrend here. This is a trend line. We are above ultra important support on $1,305 per ounce, $1,300 per ounce, depending how do you see that. That correction do not change much. It's just a typical movement in the uptrend. Oil a bit choppy. Those movements are recently. What we do have here is a wedge formation, right? We got this breakout. We broke the 50% Fibonacci, and after that the price created a pennant. And pennant is usually bullish, not bullish, but in general trend continuation pattern. So we should see a breakout of the upper line of this formation. But instead of that, the price broke the lower line, declined sharply, fell back below 50%. I don't like this kind of trading. It's not technical, even despite the fact that we created that technical pattern. But recent movements are kind of choppy, and I don't like this situation. I think that the price, well, in general, if I had to trade something, I would go for a short position, but it's not like 100% trade. It's like 51 to 49, which is not enough to open a position on the real market. Euro to Japanese yen created a nice horizontal support here. broke the recent downtrend line connecting recent lower lows, lower highs. And what we are seeing here is the price advancing higher, making local higher highs and higher lows. And we are above major supports. I think that the sentiment is positive. I don't see the other way around here. I think traders had a chance for this head and shoulder formation, which I'm deleting at the moment. They didn't use this formation, so that's their problem. And as we say, if the price does not want to go down, it will probably go up. We have a new uptrend line here. As long as we stay above the red area, the sentiment is positive. And silver, as you can see, it's also safe, even despite the fact of this bearish gap. We are still in a channel up formation. We are above the uptrend line. We are above a horizontal support, so everything looks good for the buyers. Even despite the fact of that reversal. We have a nice horizontal support here. Maybe we'll bounce from that area, which would be a combination of a horizontal support and an uptrend line. American dollar to Canadian dollar. After the drop, it's kind of a sideways trend. Obviously, with this kind of sentiment, the most probable scenario is a downswing, but I wouldn't enter here because this instrument is extremely oversold. Even despite the fact that in the long term, as you can see, that movement, when we put that here, we still have a lot of space, almost 600 pips. So for long-term traders, there is a potential for 600 pips downswing. Euro to Australian dollar. You can see here that euro is a bit weaker recently, so that movement after Mario Draghi was digested. It was said that Mario Draghi was not so dovish as expected, so well, it was perceived hawkish, but that was Thursday. On Friday the sentiment changed, and now we're seeing that euro is losing on value. On euro to Australian dollar, we are still in a sideways trend, labeled with this rectangle, but with the recent drop, the chances that we will break that 23.6% FIBO are quite high. Australian dollar to American dollar, double top formation, especially the daily candle from Friday is kind of dangerous. But the thing is that as long as we stay above this green line, here the sentiment is still positive. Okay, as long as we stay above this line, the sentiment is positive, even despite the fact that there is this formation here. And DAX. DAX broke the upper line of the wedge. I told you that this one itself should not be taken seriously. Well, it should not be taken as a bullish sign. Shouldn't be taken as a significant sign alone to open a long position. But I pointed this 12,300 points resistance here labeled with red color, that breakout of this one should trigger a buy signal, and we broke that actually with the weekend gap, because they couldn't force that on Friday, and we broke that with a weekend gap, and after that the price broke also another one, and that actually triggers a buy signal, and as we can see the traders are following that. So DAX definitely ended this bearish correction here, marked with the wedge formation. And with this sentiment, we should see new highs again. The thing is that in the short term, we should expect a correction. We should expect a bearish correction here. The correction can aim this first horizontal support on 12,380 points. It shouldn't get so deep as this one. as this support. I think this one will be more than enough. The problem is with this gap, because gaps like to be closed, and especially on DAX love to close gaps, and this gap is not closed yet. That can be a problem for the further upswing. Euro to British pound, that is beautiful. It's another example of a false breakout pattern, and we do talk about false breakouts a lot, mainly because of they work, right? And we are talking about the things that work, actually, not to waste your time. And that was this false breakout. Why and what is a false breakout here? Okay, we had an uptrend here. The price was making higher highs and higher lows, as you can see, since the middle of April. Price making a correction, then upswing, correction, upswing. So there was another correction, and it was a wedge, which from the technical point of view is a correction trend continuation pattern. So we should see an upswing after that, and a breakout of the upper line of this formation triggers an upswing, and that's actually what happened, right? And it was caused by ECB. But then they couldn't hold those levels, and on Friday the price declined. Once the price fails to use the recent resistance, so the upper line of the wedge, once the price fails to use that as a support, it becomes a false breakout labeled with an orange color here. And false breakouts usually are very strong signs to enter the market in the opposite direction to the breakout. So breakout was bullish, the opposite direction for that is bearish, so that was an occasion to go short. And as you can see, the price declined sharply, tested 23.6, positive for sellers, and broke the uptrend line. This movement was caused by this great set of data from UK, which I can show you here now. Every single data from UK shown today was better than expected. Everything is green here, very good pack of data, and British pound got significantly stronger, 80 pips to euro, which in case of euro to British pound is a lot. They have first horizontal support here, but I guess that it shouldn't be so respected as, for example, this one, because here we have also we do have horizontal movements here, resistance, support, 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 as here resistance, support, support, but also we do have 38-point Fibonacci level, which almost always is respected. So here we have one support, here we have combination of two supports. Maybe here we also have a psychological support of 0.90, 0.9 actually, yeah, 0.9. But I think that 38.2 is much more significant than the psychological barrier. American dollar to Polish zloty, that is an interesting one, because what we do have here is a double bottom formation on a support. But is this support relevant for us? Well, I think it is very, very relevant, because these are tops from 2011, 2012, after the breakout, bottom from 2015, and here we are again. And also the price is creating a nice candlestick. On a daily chart, that's a double bottom formation, but obviously, as it is often with this kind of formations, don't take that for granted. Wait for the breakout of the downtrend line, and the downtrend line is here, this blue line. There is a horizontal resistance here, and I think that price coming back above 362 should trigger a buy signal. So far, that's just a normal correction, and here actually we can get a nice sell signal, right? So breakout of this can trigger a buy signal, but price touching this level and creating a reversal pattern like a shooting star or a bearish engulfing can be an excellent signal to go short. American dollar to Mexican peso, still locked in the sideways trend and the symmetric triangle, so not so interesting situation here. We are waiting. American dollar to Swiss franc, here also they defended this horizontal support. They tried 3 times, they defended that, and there is a sideways trend here, so no particular trading signal. If we would break those lows, that will be an excellent trading signal to go short, but as long as we didn't do that, there is no trading signal. American dollar to Japanese yen. I thought that they're gonna bounce from here, but they didn't. There's another resistance, which is this midterm trend line. I thought that there will be a much stronger downswing, but it's not happening. So there's no more sell signal here, and actually that can be considered as a false breakout here. Right, false breakout of this horizontal support, false breakout of this horizontal support, and all the trap traders can have huge problems. Luckily we didn't trade that, because we would have problems. Well, not problems, because we always are very careful with the risk that we take, and we do that reasonably. But I saw a sell signal here. There is a nice buy signal on Canadian dollar to Japanese yen, inverse head and shoulder formation, false breakout of the neckline, caused the reversal, but still the price managed to defend the midterm uptrend line, and it looks like a final breakout of this formation. So with this kind of an inverse head and shoulder formation, if we measure like potential target for that is 1400 pips. So far we made almost 200, so there is 1200 pips more, which makes it a decent trading occasion, especially that we're having a good swaps here. Canadian dollar also recently raised interest rates, so buying here is a good occasion in terms of risk to reward ratio, in terms of the swaps. But also definitely in terms of the risk to reward ratio, if you put a stop loss order here on 200 pips and you can gain more than 1000, that's definitely a risk to reward ratio which can be considered as desirable. Euro to Swiss franc, what I'm seeing here is a horizontal support and a horizontal resistance, and this resistance can actually be a good place to sell, but before selling I would prefer to see a bearish reaction here. So far there's none. Last but not least, Bitcoin. So China wants to buy Bitcoin, ban Bitcoin exchanges and ICOs. And what is Bitcoin doing? Well, it could have been worse actually. There is a kind of this head and shoulder formation here, so left shoulder, head and right shoulder. Bitcoin is still not so technical as it could be, but I was waiting here for those corrections. So here, that one, look at that, was similar to this one, was also similar to this one. If we put that here, right, and I would love to see the price below $4,000 per one Bitcoin. Maybe it will happen, because correction equality pattern works. As for example, we could see that on euro dollar, that correction and that correction, and we could see that in British pound to American dollar, that correction and that correction. So it works. I'm not surprised that it works. Okay, my friends, thanks very much for watching daily analytical report. If you want more trading occasions, you have to visit our Twitter account and our website alpari.news.